Welcome to the show. No expense spared. We've flown him in. His name is Jochen Staiger. He is the CEO of Swiss Resource Capital AG and a very good friend of mine. Jochen, welcome to London. Welcome to the show.
Thank you very much for having me.
Absolute pleasure. Right, Bitcoin and gold. Correlation. I don't understand the way gold is acting. I don't understand what's going on with Bitcoin. Could you enlighten the London crowd to your personal thoughts?
Okay, I try to at least, because I don't understand it either, honestly. Let's maybe get started with the Bitcoin. I think it's a very interesting new currency. Definitely, it will replace on one certain point of time, maybe the old currencies, but I think on a parallel universe, I think it's important to have it. What I'm not so sure about is what the future will look like, because what we see already is like the central banks tend to be on the cautious side with Bitcoin, because it would give the power out of their hands.
Yep.
Yeah. So they were in the past, they were in charge to do the currencies, to do their own currencies, to print the euros, to print the dollars. With Bitcoin, that's not possible. They are mined in the internet via the blockchain. On the other hand, I would say gold, super positive still, despite gold was not moving. If we go back to February 1980, gold was $850. If we only imply the normal inflation rate of, let's say, 2.5%, maybe 3%, we should be already at 2,500. But on this stage, we never had that much debt in the world. I think the latest debt report from the finance from a finance institute in the US was $216 trillion altogether. I mean, this is crazy. Everybody should have some coins in his cellar, despite a good wine cellar, of course, because you need to have some fun also. Yeah, but gold and also silver is definitely something which is an insurance.
Okay, so let's go back to Bitcoin. In September to where we are now, it's doubled.
Yeah.
How can you have a currency doubling?
Well, it's the demand, very simple, because...
Is this supply demand as we know it?
To my understanding, yes. What I heard from our sources in Asia, it was like that a lot of Chinese tried to get out money out of the system, out of China. And what I understand also from the mining sector, we heard about a lot of deals in the mining sector, which did not happen because the Chinese companies couldn't move the dollars out of the country.
Okay.
So it looks like that certain rich people, of course, also move their wealth or diversify their wealth on the Bitcoin side. And this is something which caused the hype.
Okay. And moving on to gold, it's obviously been an adverse trade over the years, risk on, risk off.
Yeah.
In terms of the actual value of gold, you say that I should have some gold coins in the background. I don't get a return on capital employed.
That's right.
Okay, we understand that, and obviously you've got the storage costs.
Yeah.
But it's basically everyone's saying to me, I look at a Google search engine and I see the looks on Bitcoin are up here and gold is down here. Is gold yesterday's story?
No, definitely not. Because please keep in mind, gold is a store of wealth, despite any inflation in the world. We can go back to the year 1910. A handmade tailored suit was an ounce of gold worth. Today, a handmade tailored suit is still an ounce of gold. If you take the value of the dollar, this is minus 99 point something percent.
Okay.
So my ounce of gold, 31.1 grams, is still the same after 107 years. The dollar from 107 years ago, I mean, you can warm your house with it. Then at least you have some heating event, but that's it. Yeah. So for me, this is not a yesterday event. For me, it's an insurance.
Yep.
It's like you insure your house. You pay a premium to hope not that your house is burning down, but if it burns down, then you get paid. And I see it the same, because all the currencies are getting less and less worse. They are devaluated on the one hand. We put on debt and debt and debt, and let's pray that the system still works. But if the system fails, with my ounce of gold or my ounce of silver, I get something to eat, I can buy liquid stuff, I can survive.
Okay,
this is how I see
so
it.
the final question on that, in terms of asset allocation, you're talking about this being an insurance premium. Yeah. So should this be 1% of my portfolio, 3% of my portfolio, 10% of my portfolio?
Well, I would say this should be the preference of everybody. But for me, personally, I would say at least something like 5% physical of the portfolio. I think it's a good advice. But gold and silver.
Understood. Jochen, thank you very much indeed.
Thank you very much.